What's going on, everybody? It's time to take a look at some fucking charts, because goddamn, this market be ripping. So right now, I think personally that the market is getting into some very, very critical levels of resistance. So it's a very big inflection point. Looking at nVDA to start, obviously this is all hindsight stuff because we just look at it. I was doing a lot of shorting in nVDA at the 280 level, and now it's freaking completely came upside. But here's an inverse head and shoulders. If we put a target on the inverse head and shoulders from the size of the head, and we put the measured move target to upside, the first initial target, 265. We broke to that target and consolidated right at that damn target, 265. This was the level that I was originally shorting. Every time we came to 280, I shorted it to 260, shorted to 260, and eventually it finally broke. I didn't have it drawn in as a bull flag, though. I was looking at this overall thing right here as a rising support, and I was looking for this rising support to break and go downside. And right here, it caught me, stopped me out, and it ripped, and it ripped, and it ripped, and I didn't go long. Now, if we were to look at this original move here as a large pull off of this, which looks like a rising wedge as well, which broke upside. So I started shorting this originally at the 240 area and got some good profits, closed them out probably closer to 233. I didn't get much of a move there, but then it broke upside. I continued to short everything at the top of the resistance zones once it started becoming a little more clear. I was never going long at the bottoms, which obviously hindsight should have been the way to do it. And a lot of us probably were doing the same, not really grabbing longs, expecting the market to potentially tank up. Well, now we ended up with a huge breakout. If we were to look at this whole thing as a bull flag here instead of a rising wedge, and we were to put the targeted move up here, the targeted move roughly off of this bull flag alone is, if I could get this from here, is roughly around the 330.50 to 335. It's like a $5 range. Now, if we were to look at this next portion here, that we had this chop here, and this move up right, this move up right here, if we go from that to this, and say this right here was a bull flag, and we put the targeted move from the breakout, the targeted move off this gives you 335 as well. So we might want to look at 335. Right now, the area that we have now found resistance currently around the 318.46. If we zoom over to the left, we can see that this level has some confluence. We had a wick high that came up here to 324, closed back under. We stayed underneath between this range right here from 290 to 318.50 for quite some time until we finally broke up, tried to hold this as support, fell back in. So where we are right now is pretty critical. We could go a little bit higher here, up to about 320.50, as high as 325. But this is where there's potential of more chop to occur and consolidation. This could be the first top that nVDA has started to make here. Looking down at a 1 minute just to see what it's doing. This was a consolidation right here. A lot of resistance at 313.50. Found support on the 1 minute, and it's trying to potentially look like a double bottom, but this could end up actually failing and breaking to the downside, but we'll have to keep an eye on it. The market's at a very critical point. Could we end up making a very big chop range here on nVDA, or could we just be looking at a trend break This makes into a double bottom right here, goes back up, tests this high. Does it continue up, or does it just consolidate between these points for a little bit before moving up? That's possible as well. So obviously we have to keep an eye on everything. But as of right now, we have found a potential short-term top. Does it retest it, double top finally, because we did have huge sellers come in? It's possible we end up making some kind of double top that eventually breaks us to the downside here. We're going to have to keep an eye on it. If we look over at SPY, let's see, SPY, well, let's look at the overall daily right now. So SPY obviously has had a lot of price action occur up in this range, and it's struggled for a while between 415.65 and, well, we'll call it 413.40 to 417. This is a critical range. Couldn't close bodies above, had a lot of wicks that came up to about 417.40 to 417, and eventually we broke down. At this point, we did finally get some momentum that blasted us up, that brought us all the way into a 431 high that eventually rejected, couldn't hold this 413.50 to 412.70 as support, dropped all the way down. Dropped all the way back down, flew back up here, rejected this 411, 412, and then crashed back down towards 350. We made another run at it. We attempted to break it again, and we just couldn't close above this 412.73 on the daily, and then we broke down, had the similar effect, and now SPY is back at these levels again. Came up here to about 418, and we pulled back. Now we do have a consolidation area here currently. If we drew a trend from this daily candle body down to these daily candle bodies, we have a range from 416 down to 405.40. We couldn't close candle bodies beneath this 405.40, and we couldn't close candle bodies on the daily above, where is it? Right here, above 416. So SPY is attempting right now to push itself up above this 416 area. Currently, that's where we're at. Now, this could potentially cause another big rejection like it has in the past every time. But then there's also that potential case that SPY is looking to break to the upside and further move up. If we were going to look at a bullish scenario, could we be looking at this move here being a giant bull flag? If so, then technically we could be looking at a targeted move up towards $451. That seems like a stretch. Otherwise, this is a rejection point, and over time we do end up coming to the downside here and finally breaking this 405 and rolling down, and then this whole move ends up becoming something larger, which if this is a giant bear flag of some sort, we could target all the way down here towards 289. And if this was just like some kind of, or this right here was some kind of bear flag, that we end up coming back down to 325, 327. That's another targeted area. And then you could also potentially look at this as some kind of ascending triangle. If we targeted move off of that, that could bring us back down and just be in this range here, bring us back down towards 350 to 348. So this right now is a very critical point. On a daily, it does look pretty good right now, but we're still not able to close any 4-hour candle bodies above in this range between 416.50 to 416. So we do need to see SPY potentially finding support on this level. We've done it before. We found support for a little bit, and then we just tanked. It's right in the same zone. The 417 is the biggest level. until we can find support and hold above this level, we can't really say that it's getting that bullish. But until we do that, technically speaking, this could be a short. Now, right now, it looks pretty dang fucking good. A lot of stocks look very freaking good, including SPY. So it did make this consolidation here for a while. It was just chopping around. Every time the bears brought it down, the bulls bought it up. They've been staying strong. So for this to just roll over and crash is kind of harder to believe as of right now, to be honest with you. The bulls, I think, have this under the wraps right now, but we just need to continue to watch this level here because this is huge. As long as we continue to hold support on this for this level here of like 416 to as low as 414.50, SPY can actually just continue on its move. So 417 is huge and 418 is huge. If you were to look at another bearish case, which I'm not as fond of anymore, just for the fact of I've seen so many of these type of patterns not work out in the sense of, being bearish or whatever. But right here, 440 bucks, if we came up straight from right here and hit this resistance, well, I guess we could probably go off of these two wicks. That might be a better way. If this came straight up here, you have about 431 as a potential resistance zone if this thing decides to continue its rally, depending on how long it took to get up there. Longer it takes, the higher the price could go. You could look at this as a giant rising wedge, but then you'd be looking at some higher targets. If you break anywhere down from 404.78 and close beneath and hold as resistance, that would be your confirmation for a very big short. And anything held above 417, 418 could be your confirmation for a very good long. So we are in that range right now. Just wanted to put that all on everyone's radar as we are at the very, very top of SPY right now. Not the top, but you know what I mean, the top of the range. NASDAQ has a similar thing where it was in a potential of a rising of some sort pattern. But we can also draw a rising wedge off of these touches, potentially something of this sort. NASDAQ did break out at the 13,300. It even back-tested a previous double top, which was pretty nice to see. Right on this red candle here on the daily, this was the first top, this was the second top. It came down, back-tested it, and rocket ship springboard right off it. Broke out of this pattern here. If we're looking at this pattern as similar to nVDA and we're looking at it as a potential of a bull flag, then your target off of this potential bull flag actually can bring you up towards, if I can grab the damn thing, I have so many little lines in here. If we could, come on, work with me here. Thank you. Sorry about that. If we were to take a bull flag target off of this breakout here, that could bring NASDAQ up to 14,840 as a potential target, with the keep in mind that this could end up being some type of resistance that does dump you back down either to support, to back test. It continues up. However it plays out, that could be a rejection point. So if you start getting up into the 14,000, you could start looking at potential shorts. This level also is key if you look to the left here at the old previous high of 13,700. If we're going off of daily candle bodies, we could look at 13,640 as a key level for NASDAQ to potentially continue to hold above, which as of right now, it is above on the daily. If this flags, this could end up being a very strong move. If we look on the 15-minute, it's still on this beautiful breakout. Since it broke out of this pattern right here, I haven't looked at it since I drew that previously. We now have this first initial 15-minute bull flag, which if you go off of this point and draw it up, we pretty much hit close to the targeted move. Could this be now making another bull flag? That might take a little longer to play out here. You know, if it ends up staying sideways like it is right now, chopping around. I don't know how it's going to play out. If it holds here or if it has to come back down and, retest this 13,640, that's possible as well. If this somehow turns into a bull flag, we can actually see what the targeted move would be next if we go off of this long move. And then obviously, depending on where and when it breaks out, the next target could bring you up towards 13,960 if this is going to break to the upside. And if we lost 13,600, or actually we'll call it, if we lost 13,560, then we could be looking at price to come all the way back down to 13,300 for another test. But at this point, it seems decidedly we've broken to the upside here. Looking at a daily, NASDAQ is just continuing to push. But if we were to at any point lose 13,200, that could bring us down to a support of 12.8, which if we broke out of this pattern here at some point, whether we come up here first, reject, break this pattern, and come down, the biggest support is way down here at 11,800 with a low of 10.6. So these are the times that you want to start looking at above targets and below targets. Of course, if we start moving and consolidating above here, looking in the past price action, when we did rip through here, this was pretty much straight up move, not much resistance, all the way up to 15.2, 15.3. We had a little bit of resistance at 14.3, and then we couldn't really close bodies previously, 14.1, 14.2. So right around there could be a pretty key resistance if that's where it wants to go. This 14K might just blast through like everything else if you look at stuff. Google is starting to push really, really good. I was bearish Google for a while until this earnings broke us through this pattern. I was looking at this as a potential bear flag, which obviously, looking at it hindsight, we could have probably drawn a resistance like this and said, hey, Google broke out of this falling wedge, back tested it, and is ripping up. This could potentially target Google back to 150s if it can break through, depending on what gives it the momentum besides this rip right here. That could be either we come back, we back test that, and then we go. That could make some kind of cup and handle, which wouldn't really give Google much resistance, much of a pullback, but it's possible that we end up, potentially coming back to 113, 114. If it just continues up from here, obviously we have a lot higher to go, but I'm kind of looking at this as potentially building, an inverse head and shoulders. So I am kind of hoping that the market will give us like a good buying opportunity, depending on how deep it goes. If it doesn't go very deep, then that would just be a cup and handle or an inverse head and shoulders. But this is a very strong top here, roughly between this 123 to 124 area. It could still come up a little bit higher here, but then it would start canceling out the thoughts of a cup and handle or a inverse head and shoulders being a potential. But if it does, 128 was a previous area of resistance from 128 to about 129 to 128 or so. That was like a pretty critical area. If you look at 130, actually, you can see when we broke down, we found resistance on 130 and then started the rip down. So this could actually be heading up if we wanted to take measured move targets. And we looked at this as a bull flag. We the measured move of the break of the bull flag, roughly around 125.60. 124 is probably a pretty good level, but we could still just build, like I said, build a base, whether it's just sideways or if we end up holding 120 or if we just go down here, then that would be a deeper correction. Obviously, I'm not 100% sure how that's going to play out unless we just continue up from here. Apple, if we look at Apple, 174.30. I was looking at this as a potential of a rising wedge just off of all of these resistance touches. But as of right now, Apple is trying to either hold itself above the previous high of 173.50. This 174 is pretty critical. And then also this 175 is huge. If this is just like a little broadening wedge here, you can see between price going off of this wick, and then this wick. We are now tapping some pretty critical resistance. But if we look on the 15-minute, obviously I have a lot of lines here. This was kind of that rising resistance. Resistance here, huge rejection. Maybe it's just trying to backtest that. But if this whole move here was some type of bull flag here, then we go from the bottom to the top wick to find the potential measured move off of Apple. And we put it here, say it does decide to break out. Oh, I already had it done. If it decides to break out here, 184.62 is that target off of that potential if this does happen. If Apple doesn't hold this trend, which right now it looks like it's trying to actually hold that, if it can't hold this 174 as support and it comes back down, the lowest support here is down at 170 again to, 171 to 170. But right now it does kind of look like it's maybe holding like a support here. If we drew a resistance point, 174.04, we've broken through, but we couldn't close it as support. It goes down as low as 173.70 as well. So if we dipped a little deeper here, that wouldn't be too bad. But I think it might try to hold a 174 just because the market's trying to be so bullish right now. But we'll have to see. 173.70 is not too bad. And then the 172.70 is also a key level here that we attempted to hold above 173. We got rejection here at 172.70. We broke up, we back tested it, we ripped, and now we're doing pretty well. So, between 73.20 to 73.70 on the downside, unless this just holds this resistance, which as of right now, it seems to be trying to hold, but it could be breaking a little bit on the 5. We'll have to see. You got a lot of buyers coming in right now. Could be just trying to maybe make some kind of move. But anyway, that's my Apple. And then as far as like downside, big downside moves, if Apple is like going to say this right here is a pattern of some sort, which it kind of looks like it breached it a little bit. But, if this was like if this is like a broadening wedge, it's not too big of a breakdown here, but it would have to be from the smallest point on a broadening wedge and then from the breakdown. So that would actually bring Apple back down towards 168. And if that did happen, and then we did actually break to the downside off of this, and we started rejecting, and this whole thing was a rising wedge, then Apple would actually have to come all the way back here to the bottom of this wedge, which is right around 144. So that's a key resistance on the downside. That is only if Apple cannot break and close above 174. Now, as of right now, I think we're above it. 173.70 was the previous daily closes here. You can see or 4-hour closes. You can see we haven't really closed one above there. So if we back tested 73.70 and held that as support, that might not be a bad long short term. But we need to break 175. Ideally, 175, hold support. Then you might actually get a signal on a long. Let's see. And then Tesla. I want to see what Tesla's been doing because I'm giving it a little bit of time here. I actually went long on Tesla down at 165. If we look here on Tesla, we had a very strong resistance rejection and earnings came out. We were up around, not right there, over here. We were up around that 207, 208 bucks, got a strong rejection, found support, rallied back up. If you zoom in here, we can see that after we bounced off of this 153, we came up here. We found so much resistance at 165, it really just didn't want to break through. A lot of bears were thinking maybe we'd come back down, break the low, or even come down to previous support down there. But Tesla said, no way, I'm staying in this. I'm going to continue ripping. So it held this 165. It broke through. It came back, and it actually back tested the 165 as new support as of right now. So that was about right here, give or take. This previous candle body couldn't close above. A lot of wicks. Then we ripped up, we flipped it into support. I went long here on options, which expire in 2 weeks, but I have a 177.5 call. Now, if we also look at this, of course, the bears right now are rejecting this level because they're probably looking at this as like, a rising potential bear flag. This is a rising channel. Even if this thing was going to continue to be, potentially a bear trend, it could actually come all the way up here and still drop very significantly. So this resistance up here is only about 190, and that would still be potentially lower high, lower high, lower high. So if Tesla is going to pull something of that sort, that could still happen. But this is something that I wanted to talk about with Tesla because I'm in my longs here. Now, what I was just taking a look at actually recently, which it's getting a rejection right now, is if you look at this long-term potential trend from this resistance here, a lot of resistance here. We made a double bottom. We held that as support. We ripped up, found resistance on the overall, from this top, boom, top. Couldn't hold it as support. We fell through, dropped all the way down to 175, rallied up, tapped that trend, and then we dumped all the way back in, found support down here, which I just drew off of this wick here. And then we started making our uptrend, which the uptrending line here is still intact, which comes all the way up here, which if we decided to get a big rejection here off of this and we fail and fell back in, that uptrending support is still around 166.15. One thing to consider, however, on the daily time frame is this right here. We could not close any support or any candle bodies above 172.10, and currently Tesla has a daily candle body currently trying to close above that 172.10. So as long as we remain above 172.10, it is pretty bullish. On the 4 hour, if we moved it up 172.22, somewhere in that area there, which we've actually, I believe, tested this morning. Now, on this resistance that I was talking about here, going up from, I'm going to get rid of that, going up from this tap here, as well as all the other taps I discussed earlier, Tesla is potentially either attempting or rejecting at this trend breakout. If we look on the 15-minute, however, right now, it's actually trying to hold it as support. So this is something that to me is pretty significant because we are looking like a rising wedge of some sort right here. If you just drew it in off of these wicks, something like that, this is probably what the bear thesis is right now, that, hey, Tesla is, in a rising wedge right now. We've had a fake out downside, fake out upside, and it just can't do anything. But if we actually started to close candle bodies above 175.20 and start holding that as support, then potentially this could be the signal that Tesla is going to be a very big long. Now, of course, once we get up into the 77.50 area, that's where the bears could step in back again. If they did, I wouldn't even care, as long as with the rejection, we either, number one, held that 75.20, or number two, the problem is we could actually come all the way back into 72.22 and still be bullish. So that could give a short from 77.30 down to 72.20, take the profits and go. It depends on how it reacts up in that level if this thing is going to be bullish. Like I said, downside, if this rejected and broke 72.20, then the short will most likely be way better than anything else. I would take that short. If we rejected 72.20 and held below, then you probably can be looking at this either, number one, coming all the way back into 66.50, and maybe it bounces off of that, or it ends up potentially taking that much longer to break out, or a break of this flat bottom 164 could bring you all the way back down to this old low of 150, potentially this 146, and if that broke, you got a lot of levels below. The reason that I took it long, however, is because of this consolidation setup right here that you can see. This consolidation here, whether you want to call it inverse head and shoulders, ascending triangle, whatever, right here, chop, 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 breakout, come back, double bottom back test off it in a rip. And actually, if you went back on Tesla's history and you looked way back here to before the breakout of this area here of, oh wait, not there, sorry. That's actually, that's another thing. If you look here, this right here was the consolidation that we had on Tesla that went from 125 up to 152.80. When we finally broke through 152.80, we rallied very, very significantly. This was the resistance. And where did Tesla end up bouncing on when we came back down? As of right now, Tesla did bounce at 152 and never closed candle bodies below. So that was a previous support right here of this consolidation. And then also if you look down on a 15-minute, which I don't know if I can even go that far at this point, maybe I can, was right here. This was the 125. When Tesla came down after, and it came down to about 100, this was the consolidation pattern that Tesla made before its rally. It made this inverse head and shoulders, whatever. Also, an ascending triangle where it couldn't break through 125-ish, and then it broke up, got a key rejection, came down and back tested it as support. And right there, look what it did after the fact. So if you're looking at this as an ascending triangle right here, breakout, back test, and then you scroll over to right now, what did we have? An ascending triangle, breakout, back test. And now you're potentially starting to rip. So this is why I'm very long on Tesla, because I think that this was a key back test. But we'll have to wait and see how price plays out. For right now, if we look on a 15-minute, we could just say 174.80 or so is an area, but I'm sure if we went down 75.21 off the 15-minute makes the most sense. So look for a potential break of that and a hold above, and then maybe we can look for longs. If you want to long this area here, you can long the 174.40 if it even comes back into this point, where right now we're about 74.70. You can long the 174.40, but you'd have to have pretty low stop loss, at least down to 173. And if we close below 173, then you'd be looking way down here. So you could stop below this recent wick too. You could stop it below like this rising support at 173.80. That's not too bad of a thought. But ideally, we need to break 175 and close above.
I think that pretty much gets me everywhere. But I want to look at coin
on something, because coin is potentially doing something pretty awesome as well. If we look at coin here, something that we can see, if we look on a daily just to start, coin has a very ugly looking pattern. But if we zoom in on the daily, as of right now, coin has a bull flag or bull pennant breakout. If you go from the top here to the bottom here, and you look at where we just broke out from, the targeted move off of that pattern is 176. Now, as of right now, coin needs to close candle bodies above and open a daily body above 161.30 to get really bullish. That's where you would want to see. Not just a body like this, you'd want to see the next body closing back above. But if you want to scalp earlier entries here, we can actually start taking longs down here between this 159 to 160 area. Or wait for the break in the close above 161 for the ultimate long here on a smaller time frame. If you start flipping 161 to support, this is going to absolutely rocket in my opinion. However, we'll still have resistance anywhere from 64 in this range, so we're going to have to be careful of that. There is some heavy resistance up there as well. But something that I was talking about on my trading view was coin putting in a similar pattern setup to C3AI. Not only does the daily look very similar to C3AI with this chop fest, this big dip breakdown, then reclaim, but or even just this setup here, right here, big chop, dip, breakdown, and then a rally into a pennant. But it also has a very nice setup here where if you were to say put something like this, you have your trend break, your double bottom. Well, actually, I think I had it more. Well, maybe I drew it like this. I don't remember how I drew it now, actually. Let me look at my trading view because I drew it out on... was right about here. So, yeah, I went off of that. All right, let me go back. This was drawn in like this. Like this. So... at the point of coin being right here, I was talking about how coin could come back in to 57, make a double bottom, and should rocket up. Why? Because we had the double bottom right here, and then we had our rising channel right here that broke to the downside. First tap, second tap should be the breakout potential. Right now coin hasn't been able to close above this area here. 61-ish. So it could be viewed as a little more bearish for the short term until we break above there. So until we break above here and close, we can just wait it out if you want, in case this doesn't play out. But I'll show you the thing that I was looking at and why I went long on coin at 57 was C3AI. Look at this setup here. We had this double bottom, which I actually posted about going long right around this point here at $17.20. And I went long on calls, $21 calls. And then we ended up having this channel trend that broke to the downside. And I took this short here on the break of 20. And I wrote it down. And I ended up having to close it at $19. And then I stopped watching it. And I just continued holding my longs. And we ripped up to the upside and continued up. Now, right now, it's up at some previous critical resistance levels. If you go off of this, 27.62 to 28. If you go back in history, we could not ever really hold support on AI above 27.20. A lot of wicks, a lot of candle price action, but we've never held it as support. So that's where we're getting rejection right now. It's been a pretty good uptrend. If you were to look at Elliott wave count just off of like an hourly time frame for the hell of it, just to see like whereabouts we could be at, just for speculation. 1, 2, 3, 4, and then this could be the fifth wave. If that's the case, then we're looking at AI to potentially start its descent, maybe, if this is actually it. But this could also be like a 1, 2, 3, 4, and then a fifth wave. So it's hard to know for sure where you're at. But if I was to say this is an A, either way, you should get an A and then a B, and then you'd get the C, which would bring you back down to, the start of the move or so, or whatever, back down towards $20. But that's just on an hourly, so it's hard to say for sure, unless this whole move was a, 5-wave structure here, and then this was the A, and then this is the B, and then you go for the C because you did kind of have that trend break. That could be a possibility too. I'm not huge on Elliott wave, but you do get an A, and then you get a B move, and then you get the C. So if the market is going to overall be bearish in the, coming up, this could have been a fake breakdown right here of a channel that now broke to the upside. Either way, I did take some profits up in this $27 range. But the whole point of me looking at this was the point of this double bottom, this support, this double bottom that happened afterwards with a flat resistance or flat support of 19, and then a huge rocket ship. And then if you look over at coin and you look on the hourly on coin and you delete some of these lines here, you kind of have that double bottom, that rising right here, rising channel, and then you have your double bottom. But it's not having the same outcome as AI did is in regards to the rip. So that's where it gets a little bit sketchy here, because you're getting a double top as of right now. So maybe coin has to come back in. We'll have to see. Could be making something more bullish, but I'm not too worried about it just yet. I will just stop out if we broke 57, and I'll probably just flip short. Obviously, obviously, it depends on how Bitcoin is reacting and so on and so forth. Looking at Bitcoin too, it's still not having a very easy time, because we have now, if we look on a daily, we had a breakdown of this potential pattern. We've came back up multiple times now and have tried to reclaim it, but we just cannot seem to reclaim this pattern. And it's starting to get more and more rejections here, which means coin could actually be in trouble if Bitcoin can't do anything about this here. And that kind of looks like a potential of a bear flag. If it is a bear flag, the target of this bear flag, bear pennant, could bring you down towards 23.4. So, and then also, if you were to just draw this out as a potential of an ascending or a symmetrical triangle, the target of the symmetrical triangle brings you down towards 23.2. So Bitcoin is still in trouble, but it could be okay as long as it holds 26.4. If you start losing 26.4, then you could be in trouble. So something to watch, especially because the DXY, I know there's a lot of stuff here, DXY is continuing to fucking rip. So DXY put in a huge double bottom as of right now. It has key resistance up here towards 104.4, and that's where this is going to potentially either, number one, the market's going to stall out right there, or number two, if this does break to the upside, the market will most likely 80% of the time break down. So DXY is a big signal of a market bottom or top, and right now the DXY has bottomed and it's absolutely ripping, and it's topping Bitcoin potentially as well. So look at this big channel, market bottomed, stock market bottomed, Bitcoin bottomed here, came down, and market is potentially at a top resistance, while DXY has held on a beautiful potential double bottom here, which could be a bigger picture of AI if you think about it, what we were just discussing. Channel break, double bottom right here, boom, boom, channel break, double bottom. This would rally it back up significantly, which actually could bring all the way up in this range. Not even kidding. Because if you look at what AI did on a small time frame, this is what DXY is doing on a large time frame. It's almost the exact same setup. So if it does break this high and heads back towards 105, 106, finds support above there, then this market could be in big trouble. So it's hard to remain bullish when you see this potential setup happening. But just going to continue to keep an eye on all of those areas and those targets that we discussed. And we're just going to have to watch SPY as it potentially continues to find a topping point. So we're going to have to keep an eye on it, but I'm going to remain bullish for now. But I am keeping a very close eye on the DXY, because we don't want to see the DXY breaking into new highs, because this market could get seriously pummeled if that does happen. So we'll have to see, but as of right now, markets are remaining bullish, so we can continue to consider the fact that they are going to be bullish until something happens with the DXY or SPY gets a huge rejection at some of these key levels, along with the NASDAQ. Well, I hope all of this made sense and was helpful for you guys, and I hope that you guys appreciated it. Airbnb also is kind of in like a nice uptrend here after a beautiful double bottom. If you are looking for longs on Airbnb, I would play this trend support right around 110, and just hope that it will continue to trend to the upside here. You'd have to stop loss it, obviously, But I think that it could, you know, make its way and rally back up towards 118 or higher, depending on if it decided to break out of this overall pattern, which kind of does look like a bull flag. That could actually lead Airbnb to some insane highs. It's crazy to me to see how bullish a lot of this stuff does look like it could be, and DXY is potentially ripping. So I'm not sure if this is going to end up turning into a cup and handle that breaks to the upside here. That's possible, but it could definitely set the market up for a huge bottom. And some of these stocks are behind and have not gone yet. So if they are going to go, they are going to need to catch up. So this is one of them to watch. Airbnb looks pretty nice buy potentially if the market's going to break out. And easily you could just stop loss it below 109 or so and call that a beautiful, beautiful trade. Maybe it needs to come back and test it, but I think it's going to just hold this uptrending support here because so far it only has one touch, two touch, so it should get a third touch here, whether it's at 109.89 or what. But you can stop loss at about $1 or $2 below, or even below the neckline of the W pattern of 107, and take it all the way up here and potentially higher. So this could be a good long trade setup right here with some tight risk. But okay, that's all, guys. I appreciate you watching my channel, and if you guys enjoyed this,
Leave a like, comment below. Let me know what you're in, how you feel about the market. And until next time, sorry for the long video, but I had to cram it all in. Peace.